Almost every trader focuses on winning, but not losing is just as important as winning. I strongly believe that knowing when not to trade is just as important to making and keeping profits as knowing when to trade. Hello everyone, I'm Kathy Lee with BK Forex. And having been around the trading block for over 20 years, I've learned to trade only when the time is right. That means trading only the Asia and early New York Open, though if I didn't need sleep, the European Open would also be a great time to trade. There are also specific times that I do not trade, and staying out of the market during those times is how I've been able to stay consistently profitable month after month. Last year in 2022, I only had one losing month, and the same was true in 2021. And that's because I know that the 5 most dangerous times to trade are the following. Number 1, the London close. New highs or lows of a session of the day are oftentimes made near the London close, as tempting as it may be to join the breakout, for trend traders such as myself, it is the worst time to trade because the breakouts often turn into fakeouts. Take a look at this dollar-yen chart. You can see 2 examples of a breakout move near the London close followed by a reversal. The same pattern can be seen in this Eurodollar chart. So if you see a new high or lower breakout form between 10 a.m. to 12 p.m. Eastern Time, don't be fooled by it. Number 2, the New York close. The New York close is a terrible time to trade because spreads widen for rollover and close of day New York flows can lead to erratic price action. Depending upon the broker that you use or the pair that you're trading with, the spreads can widen significantly and stop you out for no reason. Or if you're initiating a trade around that time, you can find yourself paying up or exiting at a worse price because of wider spreads. Number 3, ahead of big data. I never trade ahead of big data releases like U.S. non-farm payrolls, inflation, and the first quarterly GDP report. In fact, last week I sidestepped the Q4 GDP report, and these charts show why it was such a great decision. There was no continuation, and in fact a reversal in the Asia session in dollar-yen the night before the report, and the morning of, there was just consolidation and false signals. The same can be seen in Eurodollar. No continuation in Asia and consolidation before the data in the New York session. Reports like these, especially inflation, non-farm payrolls, can be big market movers for currencies. And so it's logical that the market will consolidate with no real direction or momentum before those reports and explode afterwards. Staying out of the market before the data releases can help avoid losses and preserve profits. Using this tactic, I was able to make and keep 190 pips trading my ZIP strategy this past week. Number 4, rate decisions. Rate decisions are even bigger events than data, which is why I never ever trade ahead of FOMC and ECB. Next week, we have both rate decisions on the calendar, and the market is split on the central bank's next steps. Even if they had a good feeling of which way the central bank could go, forecast guidance at the press conference can create very messy trading. It is always better to step away from the market, the Asia session before, and the session of these big events, because there will always be opportunities afterwards. Rate decisions can provide a lot of clarity and direction for weeks ahead, and is not necessary to take the uncalculated risk of trading before the event. Also, since the rest of the market is typically in wait and see mode ahead of the rate decision, there's usually consolidation and no direction before the announcement is made. Number 5, holidays. Last but certainly not least, don't trade on holidays. This should be obvious, but traders abroad may not be aware of all the U.S. holidays. When the U.S. markets are closed, there will be less participation, which can distort how currencies trade and spreads can be wider. There's also a good chance of consolidated quiet trade, which increases the chance of false signals. So just stay out of it. Now, I hope you found this video valuable. If you want to learn more about my ZIP indicator, click on the link in the description below. Also, hit the subscribe button and smash the bell icon to be notified of each and every one of our YouTube video posts. Have a great day.